a screen to share? It's a little green box on the drop-down menu.
Yep, got it right there. How's
okay,
that?
beautiful, beautiful. All right, so first of all, I'm just taking a guess. Black Lion CTA, is it because the background of your charts are black that you
No,
came up
actually,
with that handle?
no. Black Lion was the nickname of one of the favorite fighter squadrons that I served in the United States Navy.
Yeah, I was reading about that. Looks like you flew everything.
I flew some great platforms. I started out I spent a year as an A4 instructor after I got my wings, and I was assigned to NAS Miramar, where I flew the F-14 first with Fighter Squadron 111, and then Fighter Squadron 213 that was the Black Lions. And then had a great opportunity and did an Air Force exchange tour and flew with the United States Air Force for 2.5 years, where I got to fly brand new F-16 Block 50s.
So tell me how a pilot, someone, that really had, and I think it takes a lot of courage and concentration. And I'm thinking about how your skills as a pilot might translate into flying in the markets. Why don't you tell us how that training may have given you an edge in coming into this business?
Well, where I think it gave me an edge, Dale, was, and I agree, there is an edge there, particularly in the futures markets. I think there's two things. One is the ability to compartmentalize, the ability to turn everything off. I mean, when you're in the airplane, if you're trying to land aboard a ship or you're over Iraq or whatever the case may be, you can't be thinking about what's going on back home, what's for dinner back on the ship. You've got to be able to concentrate and focus on the task at hand. That's certainly very helpful. I think the other thing is just being able to deal with the reality of the way things are and not necessarily the way you want them. 300-400 miles inside Iraq or flying a combat air patrol somewhere else, you don't get the engagement that you hoped for. You got to deal with the engagement that's in front of you. But I think the most important thing,
you learn to adapt to what the situation is, and you're always reassessing, aren't you?
Constantly, and it'd be a lot easier to say, well, gosh, I wish this would break out, or I wish that would break down, or do something, or I wish this would test a certain level.
I use a magnet on the screen sometimes, Brent, to try and drag the candle up or down.
How's that working for you, Dale?
Well, I the course is $999.99. So how did it happen for you? Were you trading while you were in the Navy as a fighter pilot, or did it happen afterwards?
Mostly afterwards. I wasn't actively trading when I was in the Navy. I had a broker. I was stashing money away as fast and hard as I possibly could. This was the 90s, so okay. My broker and I were bull market geniuses all the way up till 98, 99. Right. But just fell in love with markets, fell in love with analysis, fell in love with reading. He'd send me everything on every IPO and loved reading it and just trying to find an edge. And it really started while I was flying. I can remember when we would deploy for 6 months, guys would be, getting Sports Illustrated subscriptions or whatever. And I'd be showing up with boxes of, with stuff like Graham and Dodd security analysis and Larry McMillan's books on options and anything with a workbook to try to learn and get better.
Okay. Let me ask you, were any of the books or even live mentors influential to, the process that you're currently using, or helped you break through and give you a new paradigm?
Yeah, definitely. I mean, in the early years, I was just all about learn the technical aspects of the business, learn, what all the contract specifications were, learn all the technical analysis, learn all the options Greeks. I thought that if I had all the technical knowledge, I would be successful, and it's helpful. I think that's required, but I don't think that's ultimately what completed the package. Recently, in the last year, I've switched over to reading more about psychology, neuroscience, and physiology. John Coates' book, The Hour Between Dog and Wolf, recently completed Brett Steenbarger's Volume 2, phenomenal book. Michael Martin's The Inner Voice of Trading. So kind of focusing less about the hard skills and more on the soft skills and the psychology of it.
It's all in our head, isn't it?
Indeed, and I'll be very honest with you, Dale. I did not pay enough attention to that early on, to my detriment.
Okay, so there are a lot of things. There's FOMO. The waiting is the hardest part. Being in a winning position and getting out early, first daylight syndrome, and then watching windfalls occur. Tell us about what were some of your, I'm better at entries and exits. So we all have our strengths and weaknesses that we bring to the table. What have you really worked on that has made you more effective?
Well, I think going back to kind of the Navy days, like I am very good at cutting my losses. If I put a position on and the position doesn't work, I'm out. And if I get nicked up for
That's
a
key.
loss, I do that. That is a strength of mine.
Okay.
Whereas my key weakness is seeing some big move in the market and I'm not participating in it, and the frustration of missing out, the fear of missing out. That I have really had to consciously work on sitting on my hands, just saying, okay, you missed an opportunity, and wait around for the next one, and not try to jump in the the middle of something extended. I thought one of your panelists in your earlier session had a great comment about the euro dollar cross rate. I think his comment was fabulous. He said, look, this thing's in a downtrend. There haven't been any rallies to sell. And he goes, my technique is I'm not going to sell something that's gone straight down. And that takes tremendous discipline, because you're sitting there the entire time saying, well, if I would have shorted this up at whatever, fill the blank in, my account would be hugely profitable. And now you've got to stand by. So I thought one of your panelists, and my apologies for getting the gentleman's name, but I thought that was a great comment.
Yeah. So, I teach people about the key word, I think, for most traders is next, and even have people write down, Brent, I will always miss trades, and that's okay, because there's always another one around the corner. And it kind of takes some of the pressure off people that succumb to FOMO. There's always another trade. There's always another great opportunity. And why not admit what happens every day? I miss trades every day. So why is today any different? I'm going to miss some trades. But it's okay, because there's always another one around the corner, right, buddy?
Absolutely. And I'll tell you one technique that I have instituted that has helped me tremendously. And Dale, your words are so good. I hope that people that are joining your webinars are really taking this on board. All I can tell them is somebody that's been doing this for a decade that you're speaking the gospel here. But one of the things that's helped me is I've started doing, I log almost all of my trades and do an after action report at the end of every month.
You journal.
Absolutely. But this was one that Brett Steenbarger really hit home for me, is if all of a sudden there's a big move in a commodity or an index or something, and I'm not a part of it, is I will go back and log what happened and what I missed. And that's been so helpful for me, Dale, because even though I might not be taking a profit out of that trade, and in increasing, my account, what I am doing is taking out some knowledge and seeing some patterns and seeing some setups that will hopefully benefit me down the road. So I'm profiting intellectually, not necessarily monetarily. And that has helped a great deal.
Yeah, it's psychological capital.
Absolutely. And that counts huge.
Yeah. So I'd be interested in, I know you're a CTA, and I went to your website, very nice website, and I'm going to ask you to show it in a little while. So you have some things up here on the grid, different charts with different indicators. So why don't you tell us what's on your radar and what you're thinking with the market structure we're currently faced with?
Well, Dale, what I'd like to do is extend a thought that you began in your earlier session. You had mentioned gold, and
Okay.
Gold and all of the metals are trading. They trade very emotionally. Let's just be realistic. Gold especially has more emotion behind it than most commodities out there, and people will get wrapped up in the emotion. There's so many people that, the fiat currency is all going to fail. It's going to go to zero. You got to be long gold with both hands or long any kind of precious metal. And I think that whenever you let that emotion cloud your judgment, then you'll start to put the analytics aside. So what I wanted to do this morning was I thought it'd be kind of helpful to dovetail on what you said earlier, and I want to take a look at platinum. And this is a market it's been a pretty hot market. And one of the reasons is it has a lot of correlation to palladium, which I call that that's the Tesla of commodities. And here's a quick chart of palladium. You can see, I mean, literally since the middle of 2019, it's just been an exponential rise. A lot of people going, oh, well, we need palladium for more environmentally sensitive catalytic converters and everything. So it's just driven this thing nuts. Where people have forgot to go and do their analysis is palladium is a very thinly traded commodity. I think the open interest in this thing on any given week's about 26,000 contracts, and it just doesn't take much to knock around a commodity when you have such a thin float. So platinum has definitely been drug up, kind of in sympathy with palladium, but I think that's a run that's over. So what I thought we'd take a look at here is we'll take a look at the market structure for platinum. Top pane here, this is just weekly price data of platinum. So nothing exciting there. I'm a big fan of using the Ichimoku technique for a lot of reasons. Then in the green here, what this is these are the commercial long positions from the commitment of traders.
You have C.O.T. that it's real time. It updates real time or every week.
This is every week, and I use the futures. I use the historical combined data of futures and options. So this includes futures and options. So green are the commercial long positions, red are the commercial short positions, and we take long minus short, and we get a net position in the bottom pane. So what I'm looking at here in the bottom pane is the commercials. If you go back here 3 weeks ago, that was an all-time record net short for commercials. So this tells you the people that are actually dealing in platinum, whether they're producing it or using it in catalytic converters or whatever, they think they are hedging themselves for a decline, and you can see that's been realized. Or been starting to be realized. I think it's got farther to go. Something else.
You ever find? I mean, I used to follow C.O.T. religiously, and you always want to be on the side of the commercials and fade small specs or even large specs. Have you noticed that the commercials have deeper pockets than we do, and that they're at times very early? Like right now in gold, they have close to record shorts on in gold for quite some time, even with gold strength, and they maintain it. So is it still price action, and the C.O.T. just gives you a bias?
The C.O.T. gives me a bias. This tells me, and this also too helps with the, oh my gosh, I haven't been in platinum. It's had this huge run from 880 to up over 1,000. It's like, stop, stand back. This run is a lot closer to the end than it is.
I'm so old. I remember when platinum was 2,000 and palladium was $50.
Sure. Yeah.
So maybe we're going to revert to the mean the other way. I mean, one of my associates, Steve Volge, looks at those kind of spreads, platinum, palladium, that type of thing. So perhaps palladium's overvalued and platinum's undervalued on a spread. What do you think?
I don't trade those spreads, so I will definitely defer to the gentleman on your team. But I love the thinking, and that's something I commend him for his ingenuity in that regard.
Okay.
And then here we're looking at the specs. Record long position, record net long. And what this tells me is we're running out of people to buy this. We're running out of the fuel that's going to take it higher. So it's just not a time to be long. And then the last thing that I look at is come over here. Now, this is daily data in the top pane. And then in the bottom pane, this is the 10-year weighted average of annual seasonality. If you go back and look every year from December into January and early February, you get a nice run up in all the metals. Platinum certainly benefits from that. But that begins to wane here toward the second half of February. So you've got a situation where the speculators have extended this about as far as they can, and you're starting to run out of seasonals. So I think this has been a good short setup. And the one thing just you can take a quick look at, and this is just a very basic chart. This is daily data on a candlestick chart. Anytime you see a nice breakout like this, we came up, we took out resistance, and this immediately goes into distribution and fails. That tells me from years of doing this that the run is over. The trade now is to the short side.
Yeah, people wrong-footed on false breakouts and breakdowns.
100% constantly. So there's a lot of people here that, oh my gosh, it's breaking out. I'm going long. I'm going to ride this up to new highs. And you can see the commercials told you where they were, and the speculators were out of ammunition to drive this any higher, and it just got sold into.
We're getting a request. I don't know if you're prepped for it, but Forex Gal's asking if you could show your gold chart.
Absolutely. Let me load that. Do you want to look at the commitment of traders, or?
Yeah, I mean what you've been looking at
Okay.
comparatively to platinum and so forth. What you're viewing.
Well, it's going to look a whole lot like what we just talked about and what you
Okay.
mentioned in your earlier session, Dale.
Also, Brent, going back to when I used to update my charts by hand, I remember there being something that's interesting that reminded me of it when you were talking about February, that there was a classic kind of repetitive cycle of a February break in commodity prices. And a lot of important highs in gold were made in February. So just something I remembered way back in my cobwebs.
Yeah, so this is what we're looking at here. This is the exact same structure. Top pane is gold. This is weekly price data. The green are the commercial long positions. Red are the commercial short positions. We take the long minus the short, and we get a net position. And you can see they've really been kind of hugging down here near record short from the commercials. And you can also see we're extended well above the clouds. The clouds are very wide. There's nothing about this that says that the risk reward is biased to go higher.
Now I know why you went with Ichimoku. Being a pilot flying through the clouds, and now you have the clouds to fly your charts on.
Well, and
or through, huh?
Yep. And then we'll come over here to the speculators, and you begin to see a little bit of divergence because you saw gold. We had the breakout on the Iran action up here. So we had some new highs. But if you come down here and look at the net positions, and it's very hard to see, Dale. If you come over here, we were net 364, 698. At the next high, we're net 351. Now we're 354. So we're beginning to see some divergence. We're seeing price going higher without the speculators falling through to push this higher. So again, I think we've got a similar setup like platinum. And when you come over here to gold and look at its seasonal chart, just like you said, Dale, you nailed it. You come here to the middle of February and this thing just begins to fall off. And I've kind of drawn the green lines in here. Hey, here's where seasonal strength starts. Here's where it ends. It's moving sideways, and the speculators are running out of ammunition to drive this higher.
Okay, really interesting stuff that you do here, Brent. Any other instruments that you wanted to talk about?
No, I thought I didn't want to take up too much of your time.
Okay.
I'd say most of my trading, my first job out of the Navy was actually running an exploration and production company. So I spend a lot of time and energy, but I thought since you did such a nice job covering, mentioning metals in your morning show that we just kind of leverage that today.
Okay. Someone's asking if you follow Jake Bernstein. He was a real seasonal guy. He's one of the pioneers in seasonality.
I do not.
Okay. Why don't you? This be a good time to show your website, Brent, so people know how to get a hold of you.
Sure. And there's some resources that folks may be able to. Real simple. Black Lion, if I can spell it. So there it is. And what some folks may find interesting, if you come over here to the blog, every week I do a report based on the EIA's. We do the petroleum report typically on Wednesday, natural gas on Thursday, unless petroleum gets delayed for holidays. And every once in a while, I'll drop in some stuff. I had a report out there about sugar back on the 25th of January. I'll tell you honestly, that one's not looking too great. I've been stopped out of that, but that's okay. That happens, Dale. That's why we use protected. What we're trying to do here is generate trading ideas, and then you've got to manage your risk. That's just a part of trading. The
difference between pros and amateurs are pros know how to lose, so they have money left to be right with.
Absolutely, and then so you can.
You ever blow out an account, Brent?
Oh, yes.
Okay, good. All right. Okay, welcome to the club.
Yeah, there's those that have and those that will. I think, I'll be honest with you, Dale, the worst thing that happened to me, I'd never traded futures until 2009, started studying them. and studied watching the charts. And I decided, and one day I said, man, heating oil looks terrible. This is back when HO really was, New York Harbor heating
Right.
oil, not ultra low sulfur distillates like it is now. So I looked at this chart, and I'm going to be very honest with you and our guest today, Dale. I didn't know near as much as what I thought. So I shorted heating oil. I get up the next morning, and heating oil has fallen apart. And I thought that I have printed money. I'm like in my closet picking out my suit for the picture that's going to be on the cover of the Wall Street Journal, because I just had the world by the butt now.
Right.
So the worst thing I think could ever happen is to go out and have your first trade win big, because
that's a superstition on the floor.
Yeah, because if a little is good, more is better.
Yeah.
And
Okay.
so we know where that leads.
So you use max leverage.
Oh, yeah.
Yeah.
So,
All right. I'm going to question just quickly. You have any overview on this melt up in S&Ps? And just wondering if you have a view of this and maybe what your thoughts are on this blow off melt up.
I will. Right now, I am strictly day trading equities only. I'm not holding positions.
Okay.
Just because I think that right here, Dale, the risk reward is balanced. You're about as likely to go up as you are to go down, and I think the magnitude is similar. Probably a little more risk to the downside. I have tried to short intraday a couple of times and been extremely frustrated. The bid underneath the market is it's legitimate. It's real. I will share with you, I'm based in Dallas. We've got a lot of large family offices here in Dallas that I interface with, a couple of them that I visit regularly with. In fact, one just last Friday. This is a guy who's been managing money since before I started flying jets. Very astute money manager, incredibly frustrated. He goes, I'm 50% in cash. He goes, I cannot commit more money at these levels. I'm not a prudent risk manager, but I'm having to sit here and watch this go up every day. And every time, because you would think something like coronavirus would have knocked us back, 4 or 5%, would have set up some entries. And he's like, nothing. So there's a lot of folks, not just you and I, that are frustrated by this.
How about the reverse with oil being under pressure at key support? You think 50 is going to hold, or we're going to take it out? And do you see at least a bear market rally developing in oil? All you Texas guys love the energy market.
I've got to go with the charts are telling me that we've got targets, intraday targets down to about 48.5. I don't think we're going to have a huge bear market, but I'm not seeing the divergence that tells me that this is a bottom in oil right here.
Okay.
I think we get another leg down, but it's not, I'm not ready to start calling $26 oil yet either.
Okay. How about 33?
33. Actually, I have a target in the 30s, Dale.
All right. So, Brent, you are a CTA, and I read your minimum account size is 100K.
Yes, sir.
Okay. Any other services that you provide for people that aren't as liquid as that?
I have worked with some upstream producers and some folks that get royalty income on some hedging programs. Some smaller scale stuff. Have made some proposals to banks that have never gone anywhere. But but I'll definitely sit and talk with people on how they can hedge their exposure in certain situations like that.
Okay. Well, you survived an interview with me, buddy. You're now my trading warrior brother. You're a warrior anyway. So really a pleasure meeting you. And I hope 2020 is one of your best years ever, Brent.
Dale, I sure appreciate you. I appreciate your interest in me and my firm. And if any of your guests would like to reach out to me directly, there's a contact form on the website, or it's just my first name, Brent, at blacklioncta.com. Always love to meet new folks and answer questions.
Thank you so much, Brent. Good hunting, and let's do this again down the road, okay?
Yes, sir. All my best to you and yours, Dale.
All right. Thank you, everyone. Brent Carlisle, and you could find him at his Black Lion CTA, and that's also going to be his website, at Black Lion CTA. So everyone, I hope you have a good turnaround Tuesday. We'll see you tomorrow. Good hunting the rest of the day. See you in members chat. And remember, don't just count your pips. Don't just count your oil wells. don't just count your Krugerrands, count your blessings. You're welcome, Forex Skill.
Amen.
Okay. All right. Take it easy, Brent. Adios.